So you have these different types of accounts. It's a Roth IRA, a traditional IRA, a 401k. Uh, they are just simply tax categorizations. They're not a product in and of themselves, right? So inside, say, a Roth IRA or a 401k, you could own a mutual fund, and depends on your employer. If you're at home and it's a Roth IRA, it's whatever financial institution, whatever they're offering. It could be a mutual fund. It could be something called an exchange traded fund, which is essentially a mutual fund that trades like an individual stock. It could be individual stocks. It could be individual bonds. It could be mutual funds of bonds, of equities, of both, right? All sorts of different financial products can sit inside. I would say the big three for our newlywed couple are going to be the Roth IRA, the traditional IRA, and the 401k. So let's start with those first two. Those are what I like to refer to as at-home retirement accounts, right? As long as you have a pulse and one of you has earned income, you can contribute to a Roth IRA and or a traditional IRA. Now, there are income limits. If we're more affluent, the Roth IRA contribution may not be allowed. And I will say the traditional IRA contribution for many in the audience is going to be very much limited in terms of the ability to deduct. So I think for a lot of married couples, especially newly married couples, the Roth IRA is sort of the first place I would go, because in many cases, if we have decent income, we're not going to be able to deduct that traditional IRA contribution. At work, we get to deduct our contributions regardless of income. We'll come back to that in a second. So the Roth IRA, you set it up at a financial institution of your choosing, right? It's an individual account. It's not employer controlled at all. So you go to your preferred financial institution, whichever one that may be, and say, hey, I want to contribute to a Roth IRA. Most of them now on their web pages are very familiar with this. They're going to have a portal for you to make an annual contribution to your Roth IRA. There's annual limits in the year 2024. That limit is $7,000 per person, as long as you have at least $7,000 of income, right? All right, so that's the at-home retirement account. Roth IRA, traditional IRA. I suspect Roth is going to be the one for most in the audience, just because it's very difficult to deduct a traditional IRA contribution. All right, what about at work? Well, at work, a lot of folks have something called a 401k, and that's a elective deferral program where you say, hey, you know what, employer, you were gonna write me a check, or a direct deposit in this case, for $5,000 this month. Well, instead of writing me it for $5,000, write it for $4,000 and put $1,000 in my 401k. Okay, mm-hmm. It's just they call it a deferral, and you're moving money into a retirement account. And you could do traditional or Roth. Traditional is we get a tax deduction up front, and then on the back end we pay tax when we take it out in retirement. Roth's the exact flip. We don't get a deduction today, so in my case, you would pay tax on the $5,000, even though you put $1,000 into the Roth 401k. But on the back end, typically speaking, what's going to happen is, in most cases, it'll be fully tax and penalty free. So you have to think about what's best for your situation. I've actually run the numbers. I have a blog, I have a YouTube channel. I think in many cases, the numbers actually favor, in today's environment, the traditional 401k contribution. The other thing I tell a lot of folks is, well, maybe you do a little bit of both, right? So you do the traditional deductible 401k at work, and then you do a Roth IRA at home. That could be a way of, hey, we're hedging our bets a bit. And I like the traditional 401k at work because we get to deduct that regardless of our income. You know, if we do the Roth 401k, we're giving up $1 of tax deduction for doing that Roth 401k. They share the same limit. So that's, to my mind, that's a trade-off that I don't like. At home, a lot of times we can't deduct the traditional IRA contribution anyway. So why not take the Roth IRA at home? We're not sacrificing a tax deduction and do the traditional 401k at work. You know, different commentators, I will say, have different perspectives on this. But I think those two accounts, the IRA, which could be Roth or traditional, and the 401k, which also could be Roth or traditional, are the two main ones, especially for newlywed couples, to be thinking about when we're thinking about tax advantage retirement savings.